Yes, hello everyone. Welcome to the next video. So, as you've seen, we've been going through Wyckoff quite intensely, just understanding, the difference between the different types of schematics, um, understanding how to differentiate between distribution, reaccumulation, and then obviously vice versa. But yeah, so we're going to be going through an example here of applying Wyckoff in a real situation, how you can enter the understanding of it as well. So yeah. So we've got this example right here. This is GU on, I think it's on our time frame. This happened very recently as well. So if you look around June 2021, around that time, you're going to be seeing this schematic happen. Very rarely, like I said, does it happen so perfectly as this on the higher time frame, like the 1 hour, the 4 hour, even higher than that. It's usually, like I said, it appears on the lower time frames. But yeah, this is what we had going on. So PSY, buying climax at the top. We had automatic rally straight into that point of interest. UT sign of weakness to the downside. So you can consider that as a type of breaker structure. And then you've got that UTAD, which is that run on the UT at the top. And then from then you start to see another breakdown. This is the official break of that SOW. And then you've got the tests. And these tests were so perfectly um, mitigating every single time. Honestly, the amount of entries you could have got in the schematic was insane, especially from the 1 hour entering on the 1 minute, 5 minute, insane entries. So just identifying the phases. To make this really clear for yourself, when you're seeing a Wyckoff schematic happen, okay, it's all good, it's all well and good seeing it in hindsight like it is now, understand what phase it is. But understanding these points right here and understanding, okay, let me mark it out. Let me see what happens. Let me understand, is this phase A, phase B, phase C, or D? When you see that end of phase C, when you see that final breakdown and you've got confirmation of now a bearish structure, you're going to expect some kind of retracement to the top, right? You're going to expect some kind of retracement towards your UTAD, or however you like to call it, that run on liquidity. All of this can just be named differently, but it's all the same thing. Then you've got the tests in phase D. Now this is the phase that we want to be getting into. That's the phase that we're looking for entries. So when can I take positions during the Wyckoff cycle? Due to the nature of a distribution, you must understand two key elements. Is structure still bullish? Can we continue looking for buys? Or have we broken structure down, so start looking for sells? That's exactly what we start seeing here. Now, to address the first question, is structure still bullish? Can we still continue to look for buys? The way I like to mark out my charts is look at rejections. Look at how price kept on going up and what it was rejecting off. So we've got this reaction here, tick, reaction of that low time frame order block, reaction here, that breaker block. Then we had this move to the upside, the BC right to the top, came straight down to this point of interest. That was the automatic rally from the BC. Then we went up to the UT. Now we came straight back down to this point of interest. Look, if you were in buys already and you understood that we're at a higher time frame point of interest, you've really got to be wary uh, that your buys might not continue as normal anymore, because you've got this resistance right here. This point of, let me just draw it on. And then that's when we came back up. This area right here is going to be important, because if we keep looking for buys, we've got to take profits. We've got to reduce our risk, because we know we could start looking for sells. Now, when did we understand that we're no longer bullish? We saw this break of internal structure. And what I mean by internal structure is when you look at it on the lower time frame, we saw this break right here. We saw this break right here significantly as well, because of this AR. We saw that break right there, and also the invalidation of this order block right here. I mean, this one right here. If you extend that even further, just lines up perfectly. Now, as soon as we start to see that sell, Don't try to look for buys anymore. Just wait and see what market structure presents you. Then took liquidity right at the top. Boom, that's done. UTAD, we took this liquidity, purged that liquidity, went back down. Now we met this sign of weakness. As soon as we went below that, okay, that's perfect. That's the indication that we're now in sells. So no more buys. Confirmation from breakdown and the lower high. That's exactly what we're seeing here. We've got that confirmation now that we're looking for sells. Now moving on. As we're going down, we've got that lower low. And look, go back to lesson 1. Lesson 2 of the first time where we looked at market structure. Identify, is this a lower low? Higher low? Lower low? Higher low? Lower low? Higher low? We've got this downward movement. That's exactly what we're looking for. My observation on the last push. Oh yeah, so this is the key lesson that I want to teach my students. And write this down, please, because it's so influential, not only in Wyckoff, but when you're using market structure. You've got all this order flow, perfect, perfect mitigation, perfect mitigation, perfect, perfect. Now, when you've got that much perfect mitigation, in retail, you also start to see that trend line happening, right? So it looks like the perfect move is happening. But how long can you expect this to go on for? Now, potentially, if you were waiting for it, you could have had this point of interest, that trend line liquidity, for it to come back down. But in this case, it didn't happen. That's why you've always got to prepare for different cases. What we see here is an inducement. Now, this is something that I'm going to be teaching more of, but what it is, I'm going to break it down in simple terms right now. When you've got this sign of weakness right here, you go up, break that structure that was right at the top. So you've got this liquidity void right here. And on the last move before Wyckoff really distributes downwards, you're going to see very shallow retracements. Now, what I mean by shallow is, if you know, river, shallow is going to be very deep. That's a deep retracement. You might not see something like this, because if price really wants to move, why is it always going to do this? Why? Price institutions want the price to move away, and in also doing that, they don't want people to enter with them as well. So what you're going to see is a very shallow retracement. Now, this is where you have to start considering inducements and liquidity voids. So an inducement is where you've got this previous high, there's liquidity just above that, this stop losses, and you've got this liquidity void right here. Right there, there's that liquidity void. And that's where you're going to see that movement. Take note, that is where you're going to see that final move into it. It's going to be very shallow, but it's going to be a simple inducement down. Boom, like this. And then you're gone through. So if you wanted to, you could set your limit, perhaps 50% of the way through, and then put stop loss a bit higher. I would really recommend put stop loss a bit higher just for this, because either way, if you're on a Wyckoff distribution or whatever, your risk to reward is going to be amazing. So just don't over risk yourself there. You're going to try and enter off there. Potentially you could go even lower, just the end of that wick right there. And there we go. Just zoomed in slightly a bit more, straight into the void. We got that bit of liquidity that we just took right there, and then boom, straight back down. Now, my key lessons from Wyckoff. Take note of this. With Wyckoff, you're going to see so many happen in the market, but you just need to know when to act on it and which phase to act on as well. You need to understand which point you're gonna get the best entries, and when it's completely confirmed that you've got distribution or accumulation or any other type of schematic. But yeah, in the next lesson, I'm gonna look at improving win rate with Wyckoff. It's gonna be a very important one. So yeah, good notes for that one as well. Anyways, guys, I'll see you in the next lesson and take care.